Hello, folks. Brandon Chapman with you today for this Monday video for Theo Night for TheoTRADE. For October, what is it, 9th, 2023? Can it be? Yes, it is. It is Columbus Day. Bond market is closed. Was closed today, but again, market was able to shrug off a lot of the jitters that occurred overnight as a result of the war that's happening right now in Israel. It's kind of a big deal right now because, boy, what's going to happen with energy prices? What's going to happen with potential spending? We have a Fed speaker that's going to be potentially elected today, or this week rather. So a lot of stuff happening that could lead to more spending or not. So we're going to look at how the market responded to the news over the weekend and how it's setting itself up for this week with so much out there that could move the market. So let's start off with the S&P. So we'll look at the S futures. We are trading higher on the session, 0.67. You look at the SPY at 0.64. If we just look at the cash session, we open near the low, we close near the high. Certainly looks like a bullish day. Now, being up 0.75% is not necessarily lighting the world on fire, but when you look at what led today, it was, of course, energy. Now, again, when you figure, when you have geopolitical turmoil in the Middle East, that generally leads to higher oil prices, and it did not disappoint today. And a lot of this began to turn late last week. For example, stocks like PBR on Thursday had significant call activity, and we walked through some analysis on Thursday and Friday on PBR as an opportunity, but who knew that we're going to see some escalation happening and a war, again, that Israel's fighting in the Middle East. So again, what's going to happen here with regards to oil? Again, there's concerns there as oil prices turn higher on today's session by about 4.25%. Energy shares lagging that move at 3.34%. We also look at industrials, for example. What areas of industrials might be standing out? Well, how about Lockheed Martin was up 8.9% today. General Dynamics, 8.4%. ConocoPhillips, Raytheon, Exxon, Chevron. I mean, what do all these stocks have in common, right? They're either defense stocks or they're energy or oil stocks specifically. And again, as you look at these topping the list and performance in the S&P 500, it really shows you where the area of interest is. While the bond markets were closed today, you'll notice that TNX, we have just a little bar there. If you look at TLT, you can see some trade in TLT shares. It does indicate that maybe we might see prices of bonds higher tomorrow. That means lower yields, which can help sectors like, for example, utilities, that was up 1% today. This is one that last week there was some there was some bullish interest in utilities. I walked through it an out of the money a long call vertical spread last week on XLU, but again, it was just indicating, hey, we're very, very oversold. Can we get a pullback in interest rates, and can we get a pullback in the dollar strength? And as we look at gold today, it really shows what happened and why the market probably saw as much a positive drift as it did. Gold was up 1.84%. Now, if we look at gold as a proxy for the US dollar, we could say, well, okay, if gold's up 1.84%, the dollar's down in real terms 1.84%. So if we look at the SPY only being up 0.64, it really shows that, look, in real terms, in gold terms, the S&P is actually down today. So when we look at some of the underlying strength, it's probably more so about dollar weakness than anything else. And of course, gold's showing that today. And of course, what's lifting gold? Well, if interest rates, 10-year treasury yields, et cetera, if yields start to come down, that's generally good for gold. A lot of the recent dollar strength, if we look at UP, for example, vis-a-vis other currencies, this interest rate differential has been a big boost for those particular currencies, or for the US dollar against those currencies. If we look at AUD/USD, this is the Aussie/US dollar. The Aussie's been strengthening the last several days, which shows that maybe emerging markets might be gaining some ground. Now, when you look at UUP and compare it to gold, the dollar was basically down slightly today, primarily against the euro. So if you go to euro/US dollar, again, basically flat on the session. As we look at the Aussie/US dollar, again, the Aussie's up about 0.41%, a little bit more. But in actuality, the issues that we're experiencing is causing all currencies to sell off relative to gold. Gold is up more significantly today than virtually all of these other currencies out there. And we're talking about war. War is destructive. War generally brings what? Inflation with a lack of growth. What do we call that? We call it stagflation. And so this notion that has been crushing gold in the last couple of weeks as the dollar strengthened because of these interest rate differentials and hopes that the U.S. economy may be stronger than what was previously expected, that is more of a reflation trade, right? Reflation generally sees gold lower as the dollar strengthens and as the general outlook for the economy strengthens in spite of inflation. In reality, any notion that we're going to escalate the war efforts does bring us more to stagflation. And on the back of this, we have the potential election, or we are going to have probably an election this week in the House for a new speaker. And as you look at LMT, General Dynamics, Raytheon, you see these defense contractors doing really well. Does the conflict in Israel right now, does this spur on potentially more investment for military spending? You know, if you look over here, it would certainly indicate that maybe there might be a deal done for increased military spending, which brings more what? Brings more inflation, right? But the reality is these are destructive measures, and so ultimately they don't produce the growth that you'd hope for. So it probably pushes us more towards stagflation and a weaker dollar and potentially higher treasury yields. But the caveat here is we've had a once in like 60-year sell-off or more. Treasuries are down substantially in the last little while, down about 45% or so. This is rather significant. They're very oversold right now. People are one side of the trade. We might see yields just come in a little bit just because of the reflexivity, right? We go up, eventually we got to come back in, and that may help gold. That may help weaken the dollar in the near term and may allow for metals prices to rise, specifically gold. And I outlined a trade last Thursday for our members in my session, and we walked through it again on Friday in GDX, a long call vertical looking for upside to 30. So I've got a 28.30 here, looking for this thing to push in the money. So not really any significant activity today because we're making the move. You saw it build late last week in GDX specifically, in other mining stocks as well. And so it's not, again, seeing materials down here, there's the more cyclical side, like for example, like an FCX that produces a lot of copper, which was slightly higher today. But then obviously you've got the gold and as gold side of it that performed very, very well at 2.42%. And so you're seeing this dichotomy, emphasis on gold, weaker dollar here in the near term. Now, I'm not sure if we hit a stage where the economy really starts to turn lower, that gold will turn lower with it as the dollar rebounds and strengthens again. And we may see very more solid buying of treasuries causing yields to get crushed. But again, that's probably still a little ways off, as right now, after gold selling off hard with the strength of the dollar, seeing the dollar come in does help lift gold. And guess what? It helps lift other foreign stocks, in particular emerging markets. So today, for example, KWEB. So we'll look at this one here. So KWEB had a nice bounce on Friday. We were kind of held on today just a little bit. But if you look at KWEB, this is a Chinese internet ETF. And KWEB today, this was out for December. And this would certainly benefit by a declining dollar against the yuan, maybe a slight recovery in China. But again, this probably has more to do with the dollar and potential weakness in the dollar vis-a-vis the Chinese yuan or RMB, whatever you call it. 42,000 contracts out here at the 32 strike. That's rather significant, right? If we look at the time and option statistics today, 58% at the ask traded on the call side. So we're seeing some very definite out of the money calls being purchased here in 32. The nice thing is that the volatility is pretty flat here. You could construct a call vertical, picking a lower strike and a higher strike here out of the money, 28.30. You don't have to stretch it out there for 32. 28.30 would suffice and would help benefit for any squeeze here. You could go less time if you wanted, 17 no, for example. Again, you could construct a similar 28.30 spread or higher if you're wanting to be more aggressive. But again, if the dollar weakens, we see strength in emerging market currencies. This should help lift KWEB And again, maybe a shot of retesting the prior highs from September 1st. Another one here is EWJ. Now, Japan has been in a lot of trouble, right? I mean, the US dollar / JPY, given the recent weakness, the yen should have really strengthened a lot more, but they are in a pickle right now because of past policies really kind of causing them to remain bottled up here in terms of their economy and having to create inflation. And so again, can we see a reversal here towards the end of the near term? It's very overbought, and you can see what happened here in June. Pretty big sell-off in the dollar vis-a-vis the yen. And that would, in this case, help lift Japanese stocks just by virtue of the currency risk, right? And then maybe you see a rebound in Japanese equities in dollar terms. DXJ is hedged against the dollar. You can see the weakness that we've had recently. Even in yen terms for the Japanese stock market, can we catch a little reprieve, dollar weakness, stronger yen, and seeing a bounce here? Now, can we get to 62? Draw some fibs, and you'll see, okay, maybe 61.5 on the upside and possibly a chance at retesting 64 again. Today on EWJ, it was the January, and who says option traders don't use charts, but it's the January 64 out here being bought in EWJ, looking at a retest of prior highs going back to June, and then in August, and then again recently in September. So again, that's all a play on dollar weakness and a rebound in some of these markets that have been more heavily sold compared to the U.S. markets. We'll wrap this up with some energy. Oxy, for example. Oxy, nice big bounce. They finished near the high of the session. Oxy, it's one that you see a lot of option activity in frequently, but this is for this week. It's at the 64 strike here, 14,000 contracts, mostly bought. And again, we've probably gotten a lot of play. We've now moved at the money. But again, we start to break through 64. There could be a bit of a squeeze to drive it towards 66 or possibly 67. So could you look for next week? And you notice here the rising vol structure. Could you do something like a 65, 67 here that's reasonably priced on a $2 wide spread? Again, out of the money, might cost you about 63 cents or so on a $2 wide spread. Targeting 67. So you may have a chance of this thing moving in the money. You could even go 66, 68. If you wanted to be more aggressive, you could give yourself more time as well. The structure gets a little less favorable out here as we get more time, but you could construct maybe a 65, 67, 50, looking at kind of a retest of prior highs here in Oxy. Again, it's moved a lot. You can look to see if we pull back tomorrow and look for that as well. But again, looking for continued strength in energy shares. And if oil prices are going higher, we certainly look at energy prices like, for example, uranium. This is the Sprott's, uranium mining fund, but we're testing the lows here. Could we roll back and retest highs? You can look for a breakthrough today's high. But if we look at the option activity on URNM, it's an scroll this up here, an OCT 44. Again, the spreads are a little wider in this. You could look at CCJ that had bullish call activity on Friday. A bit tighter spreads. They should move together for the most part. URA is a potential candidate as well as a way to play a very, very kind of homogenous space like uranium. But again, CCJ has the tightest spreads and the most liquidity. So if you're going to go long uranium, you might look more towards CCJ than some of these other names. You could look for a trade through the high tomorrow and testing 42 as the potential target. Well, folks, that's all we got for today in the video. We'll catch you back next Monday. Thank you. Have a great one.